times we had. I see it now, I see it now. Real love, now I break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath, waiting for you to show. Yeah, somewhere deep inside of you, I know you want me to. You're just afraid to say. Real love, now I see you, and I'll make it through to find a life that we once had. I see it now, I feel it now. Real love, now I see you, yeah, you know I do, to make it through the times we had. I see it now, I see it now. Real love, now I break through to show to you that I'm more good than I am bad. I work it out, I work it out. And I'll be somewhere that you need me, and I'll be holding my breath.
What's up, guys? How's everybody doing? How is everybody doing? Can everyone hear me? Let me turn the desktop audio off. I have, as you can see, I have Phemex open right here. What I did was I have a YouTube account that we set up. So this is an account that I have deposited 1 BTC into, just over 1 BTC. And what I'll have is I'll have some money in USD, and then there's like a fucking floaty in front of the camera. Get out of here. And then some money in BTC. So if we're going through the stream and we see any opportunities that that line up, then we'll be good to take some trades during the stream, right? So so you can see that I have there's around 13,400 in USD, and then I guess I have it so that there is there's a third of a Bitcoin on exposed to BTC. So we'll be able to, the purpose of this is to be able to go in and out of BTC and to trade some of the alts that I prefer to trade. So that being said, let's get started with the stream. Hopefully you guys can hear me. Let's double check the stream health. Make sure that you guys are even here with me. Okay, so everyone can hear me. Are we good? We have some sound. All right. Do we have enough likes? No, we don't. We don't have enough likes. No, that's garbage. All right. I need some more likes, guys. I'm a like fiend. Okay, I need my fix of likes every single day. So we have a good amount of people watching the stream. We just want to make sure that we get as much likes as possible and close that gap. So everyone can hear me, right? This is good. It's 12:08 p.m. New York time, loud and clear. I like to hear that. What's going on, everybody? If you're new to the stream, my name is Ryan, aka Kennery Clark on Twitter. If you don't follow me on Twitter, go ahead and search Kennery Clark. On behalf of myself and my partner Josh Rager, we want to thank you for tuning into the BlockRoots YouTube channel. We do a bunch of trading and crypto investment analysis on this channel. We keep it non-sensational, so no bullshit, right? I try to keep my thumbnails as respectable as possible, right? So you see that I've consistently kept it as the crypto and coffee, even though it's 12 o'clock in the afternoon. And I actually have today set up. Because I'm having too much black coffee lately. We have a bottle of sparkling Pellegrino, and then today in my nice Wolfer Vineyard glass, we have some Pellegrino, and we have some infused simple syrup with rosemary and lemon. Right, so that's what my wife likes to have around. So yeah, so we're hanging out, and so we try to keep it as non-sensational as possible on the stream. I can't stand 99% of crypto YouTubers who, if you search crypto or Bitcoin on YouTube, the thumbnails, like, I know that they try to make them stand out, but they all look the same, right? They're all a bunch of ridiculous, like, round, cartoonish fonts, like Comic Sans, and then some dumb face with a gesture that is just absolutely ridiculous looking to gain attention. And we don't want to gain attention by using that cheap method. We want to gain attention and build a following by providing good content, right? Providing actionable insights, okay, good educational content, and to try to stay as grounded as possible. So hopefully everyone is smashing the like button. It looks like the sound is good. There's been times, so for those of you that are new to the stream, there's been times before where I have gone through this whole, 10-minute ramble and realized that my mic wasn't on. And that has been one too many times happening. So let me say hi to everybody. App Eagle, Math Max, what's going on? D Ross, okay. Jakey Muscles, all right, Jakey Muscles, good time to be in crypto, yeah, man. Julian, Luna, what's going on? David, X Factor. When do we start forgetting about fractals? Fractals are good to obviously be aware of. But, fractals are maybe one of the last things that I'm going to be acting on behalf of. They are good to keep in mind because the market does move. Obviously, the market moves because of people, and people haven't changed their behavior in eons. So you could say that in a way that the chart is a representation of the underlying behavior. And if the behavior isn't changing much, then there are going to be patterns of reoccurrence. But I'm not paying attention too much to the old fractals, and we're going to get into that. App Eagle, Wi-Fi chart, please. Okay, comes out right away with the demand. All right. Comments about all-time high are retraced to 17, 18K. Well, we're actually going to 2,000 App Eagle, so you might as well just log out of this stream and hurry up and get it in synthetic USD. Just kidding. All right, Jakey Muscles, Sweet Canary, what's going on? David, LP, Fuzzy Bird. I just want to say hi to everybody. Kilgore. Hey, man, happy Thanksgiving to you and yours as well. Yeah, we're having a light Thanksgiving here. We're just having, just the parents. We're hosting, so we host every single year. Viking, what's going on, buddy? What's going on, my fellow swolger, my fellow lifting friend? Nellor, Daniel, Will Skelton, Saab, Ripcord, what's going on? Andrew, all right. So, Keld, oh, Mr. AP. Mr. AP, we have been in and out, like one comes in and one leaves, it seems like, lately. Not that that's occurring in the stream, but you and I have to get on a call. AP is a good buddy of mine, and he's a very talented trader, very smart guy. And yeah, we have to get on that call, by the way. So not to put you on the spot. Michael Horton, Trader Kaz, what's up, man? Everyone say congratulations to Trader Kaz. I know this is going on for a while, guys, but we got to say hi to everybody. Trader Kaz just got married. And Trader Kaz is another one that if you're not already following on Twitter, you should go ahead and follow him on Twitter. I know like everyone on Twitter wants to build a big following, but there are a lot of people that honestly, if I'm going to speak my mind, they don't deserve a big following. They're building up a following based on being sensationalist, right? And spewing out kind of commercial garbage. But Trader Kaz is someone who deserves a big following. So wisdom of the crowds, yourself in his direction. John Boss Wolf, what's going on, pal? And yeah, Connected MCM. See, Connected MCM, when I see MCM, I always want to say Man Crush Monday. So I don't know what your MCM stands for, but that's what I think of when I see MCM. D Ross. All right. So, okay, cool. So we said hi to everybody. All right. So in the stream, going to keep it simple. Okay. Go over some of my opinions, obviously, as to what's going on. And this is a period where there's a ton of uncertainty, right? We're in uncharted territory. So, for me to act like I have it figured out and, I have a really good grasp on what to expect, it would just be, not only be negligent to my own performance, but it'd be negligent for me to act like I do with you guys because, we're in the same boat right now. So let me just, let's make sure, okay, so we have chart. I have the Phemex up. We get any opportunities, but first I want to go over the chart before we even decide to take any trades. Let me make sure that I have, okay, everything is good. Reset. I just, what happens is I don't get these things set up, and then when it comes time to quickly referring to something, I'm like fucking lost. So and we don't want to have that happen. So, all right, we're good. I think the stream is good to go. All right, we got the likes up. The like to viewer parity has improved. So, okay, guys, few things. First things first, right? Now, this chart is kind of messy. I actually took off all the lines in this chart the other day, but I guess I didn't save my trading view. So I guess I didn't save my trading view. This chart is kind of messy. Now, I think right now, so I'm going to refer to this for a second because it's really weird right now. It's like everybody and I know, okay, so crypto Twitter is it's a microcosm. But in the same sense, it might not be, right? There's really no way to quantify how heavy the weight is that's carried around on CT compared to the rest of the market. I know that there are obviously people that are not even close to crypto Twitter, and crypto Twitter is its own little chamber, and it is an echo chamber, right? But beyond a large enough sample size, you could say that maybe that can extrapolate to the rest of the market. Okay, if we have, I forgot what the actual actionable amount is. That someone who takes a statistics class can probably verify this for me. But it might be worth saying that what actually is the behavior and energy that is taking place in the small little microcosm can be extrapolated to the rest of the market. So when we say that, no one is talking about cryptocurrency. Okay, let me get this straight. We're on a social media platform, okay, where literally you are seeing every thought that comes to someone's mind. Okay, for the most part, when I use my Twitter, it is like I am going out to my porch and screaming out to the world. I have my coffee, I go out to the porch and I'm like, fuck all you guys, and I go back inside. And that was my day on Twitter, right? Or, you're talking to the world, right? So you're on Twitter, okay? And the weird thing about Twitter is, you write something and someone responds to you. And a comedian said this recently, it was really funny. You write something and it's to everybody and someone responds to you personally. Okay, so that's weird. But Twitter it's a massive social media platform. I think there's 350 million users. It might be worth saying that what is taking place on Twitter is taking place everywhere, okay? And Twitter's a really good sort of litmus test for that. So when people are on Twitter are saying, no one's talking about Bitcoin. Well, everybody I know is saying that no one's talking about Bitcoin, okay? That is taking place on social media, all right? Twitter is also not the tip of the spear with social media anymore in terms of where the noobs are, okay? So TikTok has been populated by a lot of new crypto-related accounts in the last few months. All right, so people who are on Twitter are not going to be really privy to that because I think there's a little bit of I don't know how to put it lightly without hurting anybody's feelings. I think there's a little bit of a difference in terms of the type of person that goes on to Twitter, all right, versus the type of person that is going on to TikTok. I always said that, Facebook, Instagram, Twitter, Instagram is like the people that are on Instagram are looking for, they're looking for their superficial needs to be fulfilled, okay? It's all based on imagery. I said imagery. God damn it. It's all based on imagery, right? It's pictures, okay? It's a lot of superficial bullshit, right? You have your Instagram influencers that everyone is familiar with. It's look at my perfect life kind of thing. Twitter is, you actually have to put out written content, right? You're trying to take your thoughts and compress them in a way that not only clearly, get your idea across, but concisely, clearly and concisely get your idea across. And a lot of the time, there's some great discourse that takes place on Twitter. I've learned a ton on Twitter. So I would say that one is like the Ivy League of social media, and the other is, I don't want to see, the trouble is now you could say something that offends anybody. It's like Twitter is Harvard, and have mercy on me. And like Instagram is like ITT Tech. Nothing against anyone who went to ITT Tech, but I think you get the point, right? So I don't know. So there's a lot of people that are on Twitter right now that are saying things like, no one is talking about Bitcoin. Well, everyone is saying that same exact fucking sentence. So it's really weird. It's like we're all in a room, we're all at a cocktail party. Like, can you believe it? No one knows about Bitcoin. And then you go to the next person. It's like, yeah, no one knows about Bitcoin here, but everyone is saying that, which is weird. Okay, so not only that, we're completely. I get that as this is happening, it's even being said on the mainstream media. I can't believe no one's talking about Bitcoin right now. Well, what the fuck are you talking about? You're on a major media platform. You're saying that. Okay, people aren't going to you don't how do I put this? You don't let's see. I'm trying to think of a way to put this like an explorer would, right? You're not going to, for the first time, suddenly, become familiar with Bitcoin again out of nowhere, right? Everyone knows about it now. When people share sort of Google search trends and they're looking up Bitcoin and cryptocurrency, like people aren't going to rediscover it. It's already been discovered. The retail fuel has been used, right? What we're talking about for this cycle as a growth driver is, what we have is problems with monetary policy, right? Monetary fiscal policy, rates are low. Okay, so interest rates are low. So there are other growth drivers. Okay, they have the whole store value growth driver. You have this institutional demand. It's not retail figuring out Bitcoin for the first time. So when people are on CNBC also saying like no one is talking about Bitcoin. Well, guess what? No one needs to talk about it because it's already out there into the universe, right? We're all aware of it. It's like me saying like, can you believe no one is talking about Apple? Well, like, yeah, it's been the topic of conversation for the last 10 years. So no one is rediscovering it. So that whole fucking excuse has to be thrown out the window. Excuse my language, but you guys, you know how I am. My wife's not home right now, and we are coming at you from, live from New York. So, and I hate to defer to that, like, very simple way of thinking, like, New Yorkers are like that, but I grew up in an Italian and Greek household, and that just is the way it is. Brilliant family, but loud and talked with their hands and, dropped a couple F-bombs here and there. But, so there's none of that, right? So it's becoming a little bit, I feel like it could be becoming, in this larger cycle that I think is going to be taking place, I think we might be approaching a crowded point, all right? There are going to be major corrections at any point within the cycle, okay? So even if, and people right now, the trouble is, and I'm just going to get off this news thing because what I wanted to point out is like, there's a ton of stories right now talking about how Bitcoin is back, Bitcoin is back, Bitcoin is back. And I think the writing it's kind of on the wall. Yes, I do have certain opinions about the all-time high breaking. I think that when the all-time high breaks, we're going to get a major liquidity event. So I think we're going to get a lot of overthrow, right? It's going to be, the squeeze of the squeeze that will go down in history kind of thing. But I think on the same side of that, it's going to be the first major trap, right? And mind you, my idea of, and excuse me, I have the sessions on here. So my idea of the trap is that, the whole trend is going to continue upward, but this is going to be the first period that does this, right? Where you have a major overthrow, right? So you have this oscillation back and forth over time, and the general theme of this is, positively sloped, right? It's moving up over time, but around here, you can't forget that you have these points. Okay, price is not at any point. You shouldn't focus on where it is at any point, rather where it's going through time. So I think that there's a lot of things that add to the idea that we are, if this is the spectrum, that we're closer to up here. And the one thing that I always want to fall back on, and this morning I put up a few tweets of like, sick of the way I'm talking about Bitcoin and the hashtag Bitcoin shit. Because, there are a lot of people right now that it is like this addictive thing too, because you want to build a following. I get it, right? There's a lot of awesome things that come along with the following. There's a lot of negative things that come along with the following. There's a lot of opportunities that arise with the following, okay? As long as your following is legit, right? But, there is this propensity or this move towards just being like a Bitcoin's the best thing in the world kind of person, right? Where you're a cheerleader. And it's not that important, okay? It's a cool asset, right? It's cool. That's what it is. It's cool. But there's no one who's like right now, like, thank God for Bitcoin for this meal on the table and thank it for putting the roof over my head. And Bitcoin is good. The more you worship it, the more you're likely to become a potential, you have a gold bug and then you have a Bitcoin bug 10 years from now where you're still hanging on, but Bitcoin is not doing anything tremendous. It's sort of like Peter Schiff. There will be those people that marry into the romantic narrative well past the point of expiration. So the last thing that I want to do is to be too romantic about something that is one of the most volatile assets, okay, it does have a institutional push right now, but I think that if you're looking at this from the outside, it's a lot more calm. It's like, oh yeah, they're buying Bitcoin. Oh, that's cool. Like, those, they still represent a very small microcosm of the investable universe, right? Or of asset managers. Oh, that's cool. They're doing something different. They're kind of going where no one else is going. But from the inside, when you are in the echo chamber, it's like all over the wall. It's like, yeah, there's posters of Bitcoin all over the wall. My lamp is made of a Bitcoin bee. You are celebrating it like it is everything, but it's just your perspective, right? It's just from your frame of view how things look because you have built this echo chamber around you. So you're only going to really identify and surround yourself with positive information. And that's where I think that I want to make sure that I don't go there, because in the beginning of this video we talk about, disclaimer of not being sensational. And I think it's so easy. There's a lot of, influencers on Twitter and on YouTube who go that route to really just get likes. And I don't want to do that, right? I want to make sure that I am never forgetting that, I want to be on the right side of the trade. I don't want to be on the right side of the follower trade. I want to be on the right side of the trade that actually puts, green at the bottom of my P&L, and as much as possible, right? This is a zero-sum game. So I just want to make sure that I get that out there. I think right now that the important thing for me to do is to fall back on my technicals. Okay, so I always talk about splitting up your, this is the education portion, right? I talk about splitting up your trading portfolio and your investment portfolio. Okay, so you have this category over here. It's your investment portfolio. I have my own. I have my passive allocation of Bitcoin. I could talk from a different point because I have a really good cost basis now. So it's easy for me to say like, I'm just going to let that ride. Like, it's whatever. I'll let it ride through the all-time high. I'm not going to take profit on that because that is a completely separate pocket. And it's easy for someone to say that when their cost basis is like 60% below where we currently are, right? Or 70% below where we currently are. So wherever, no, it's actually, so my average now, so the last place that I got in was not here, but one of the largest places that I entered was, if you guys remember, I was pretty loud at 94 to 96. So it's easy for me to say when the last major entry that I had, right, I was really loud on the soapbox over here saying that this was contextually the most important support and resistance flip we had for a long time. But I was really loud back here, and I was anticipating a break, and I was positioning for that as well. So over time, you can imagine that my cost base is a lot lower than where people are maybe first interacting with right now. Well, clearly it is. Okay, so it's much easier for me to be like, yeah, it's cool. If it breaks the all-time high now, or if it does it next month, that's all right, because at that point, no fire is even being put to me whatsoever. It could come back down another 20%, and I don't come from the same perspective as someone who's just got in right now, and the first thing that they have to feel is that immediate pain, and then that sets them on their trail of thought, right? So it's all perspective. Now, I think that you have to keep that separate portfolio though, right? You have to, the last thing you want to do, and you've heard people say this before, is like, you don't want to not have a small portion, right? Because the asymmetry is so much to the upside at this point. You could only go to zero, okay? Whereas Bitcoin from now, in terms of theoretical risk reward, there is no telling how high it could be in the future. I don't want to go down that route of really trying to guess where it could be, but it is completely reasonable for it to at least 2x this year. At least 2x, okay? The mechanics are there, right? The supply and demand aspect of that, it seems to be there as well. So I don't want to, I don't want to scare anyone right now, but I am coming from a different position. I think that the most important thing that you have to do is not trade your portfolio in something like this. But where we currently are, I have to fall back on my foundation. My foundation is built around technicals, and contextually, from a risk to reward standpoint, this is an area, right, where I could sit here and think, okay, if this nukes, it's going to be ridiculous, but it's not nuking yet to the upside, right? This could also be a massive trap, right? What better than to just creep up under the all-time high or poke up above and then get your major, 20, 30% pullback, all right? We've had it before where price has come above previous all-time high, all right? The one thing that we haven't had, and I'll say this, is we haven't had a period where price came above the previous all-time high and then dropped another 30%. So let me go to, let's go to the BTC chart. This is on Bitstamp, and I'll look at some of the questions you guys had, if you have any right now. So let's put on the previous all-time high. So we've had periods before approaching that all-time high. We're right here. We crest up to it. Let's get the precise. So this is at right around, why the fuck is not this? Is this not All right, so this is at 11,165, or excuse me, 1165, and then drops 35%. And it comes up to, where is this all-time high? This all-time high right here is, and how painful is this going to be? 1163, okay, the high of that candle. The high of this candle right here is 1139. All right, so imagine being that person who just got involved here, because you know that when it does break the all-time high, when you have closes above the all-time high, that is game on for almost every participant in the market, right? You have your highest time frame participants that are passive allocators, that are position traders, that do not look at the chart. They're just like, this asset class is pulling a new all-time high. I'm in it for the long run. Okay, the secular trend is up. Then you have your scalpers that are going to immediately defend a level once it's fortified. You're going to have your swing traders. You bring in a ton of different participation. You bring in the most participation when you break an all-time high. You bring in every kind of market participant that exists. Okay, you bring in investors at that point. You bring in position traders. You bring in swing traders. You bring in people that don't, play on the 5-minute time frame between micro levels. So you could see that this period we came up like $30 up to it, and then had a 35% drawdown. All right. Now we haven't done that after we broke the all-time high, so it's not like you broke the all-time high and then dropped another 30% below it, but there have been really significant pullbacks. And I tell you guys, if you look at a log chart, it's going to make you feel better, right? They say to use this chart to take the emotion out of the price action. So if you look at, and if you're looking at something that has logarithmic growth. So what we're looking at right here is now the non-log chart, okay? And this would give you a completely different feeling, wouldn't it? If you bought up here, right, and you're thinking, well, it's going to break the all-time high. I mean, shit, this is the air, right? This is nothing has happened up here kind of thing. This is the air. This is the vacuum. Yeah, it is a vacuum. Theoretically, it is a vacuum. Not theoretically. Historically, there's been nothing up there. But whether we're saying moving forward it has to do a certain thing up there, yeah, how long is it going to take to do that? Does it do that over the course of 5 minutes? Does it do that over the course of 5 weeks, right? That is something that is something that you have to obviously understand, right? It doesn't mean that it has to cover that gap immediately. What it's saying is, what that is implying is that, yeah, it could, right? Because technically there's really not much order flow memory back there. But still, imagine if you were buying up here and then you saw this and then you're thinking, holy shit, we're coming all the way back down here. You're immediately, you're coming from a different headspace at that point, right? Now, you have to have different approaches, right? So you should look, if you're looking at the higher time frame chart, making higher time frame decisions, don't go looking at the 5-minute chart. I've said this many times before. People get in based on the weekly chart changing, the daily chart changing. They start invalidating themselves based on a 5-minute chart. But this is, an area where I think contextually, from a risk reward standpoint, if I'm just being as honest as possible, right? Here's the highest, so that is the last higher time frame. You guys can see me clearly, right? Because I know the last video I was kind of cut off. This is the last higher time frame support general area, right? Your weekly structure has printed 1, 2, 3, 4, 5, 6, 7, 8. So 1, 2, 3, 4, 5, 6, 7, 8 straight weekly candles to the upside. I think that's approaching a record, right? So we've been vertical, right? So one of the most important questions that I always say to ask yourself, so trader checklist, is has price built a base for the move that has been put in? So let me just fix this. So here's a checklist that we give BlockRoots members. Okay, so here we go. Do we currently have a strong base for the attempted direction the market is taking? Okay, so the closer we are down here, so have we built a base right here? Yeah, so market moves up from here. Now we have a strong base for the attempted direction the market is taking, which is back up to this high, right? At this level of extension for this kind of move, do we have a strong base for the attempted direction the market is taking? If I'm just speaking to the technicals, right? If I'm falling back on my training, then this is not really, hasn't built a strong base up here. There hasn't been a base whatsoever. You have to go down the lower time frames to see it. They're like small, 4-hour consolidations. We haven't put in a 4-hour lower low, right? So, and I have to double check that. I think we haven't put in a 4-hour lower low. We've only closed below the day's low 2 days. So November 7th and November 3rd, or November 7th and November 13th, out of this entire month of November. So the whole trend has been up. So contextually, this is the last major support level. So if you're just looking at this, just like this alone, risk reward, right? Here's resistance. Here is the last support. Where's your target, right? What is the target from here? It's a trending market, so yeah, you have to approach it with a trend following strategy. So if we're looking at it like that, 20 period moving average, pretty good line in the sand. 20 period on the weekly, which it tends to come back to, but it could come back to by just moving sideways because it's just an arithmetic mean. That is really low, right? Even if we look at that on the daily, so you're looking at 16, 9, 17. The dynamic supports, the static supports, we're closer to resistance than we are to those levels. So it's skewed unfavorably from a risk reward standpoint. So I can't really get behind being blind to those facts, right? Let me just take a sip of this real quick. Now I know I've said many times before, resistance is a construct. That's all great when everything is on the up and up, right? But that's not how I'm going to be making decisions. I didn't make it this far by saying to myself, resistance is a construct, right? Imagine that. I would have $0 right now. Okay, so I have to ground myself, and I think it's really important that you ground yourself as well. And during periods of excitement, especially in an asset that has a really romantic narrative, I think that it's really easy to get sort of swept up and swooned by this, the energy that takes place within the market. So if I'm looking at this right now, your higher time frame levels, contextually on a weekly structure, yeah, they are all the way back down there. Does that mean we need to visit them right now? No. If we put in a 30% drop from this high, so let's mark the 20. That is around 15.4, 15.5. If we put in a 30% drop, that brings you around to 13.5, which, back into a higher time frame area, into this zone, if it dropped 30% from here and it treated this as support, levels will get front run in bullish markets. So could that happen, right? Do we need to come all the way back down to that weekly level? No. Do we need to come back down there, period? Not necessarily, but should we sort of guard against the potential for this becoming crowded? I think you should. So I have actually, I've been in a short position right now for a pretty decent size. Now my shorts, you have to imagine, are not nearly as large as my spot holdings. So my shorts end up kind of hedging a little bit, right? This is nothing that is ridiculous, but it is definitely something that is going to hopefully protect from any kind of major downside for the feelings that I'm having right now, right? Because again, the technicals at this point, so if we look at this structure, on the way up, have we held, so I said 4 hours. So first of all, the daily levels that we have, they're pretty insignificant. Okay, so you haven't really built a base again. I like to see, so if we go down to something like this, for example, is not a support that I would look to and say is going to be strong, right? It's kind of upward sloping. You have a bunch of lows that have been uninterrupted. I don't like when you have lows that are uninterrupted all the way up. So if we look at the 4-hour chart right now, so here's the 4-hour chart. Look at these lows. Okay, if I could just get out this fucking drawing tool. Excuse me. So we have now a low up here. Low. All right, low, 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 low. You get the idea. There's not a lot of violation in the opposite direction that has taken place. Okay, it's been pretty nice and pretty easy, except for the last maybe 2 more recent sell-offs, right, that have recovered pretty nicely, have violated their previous support and resistance flips, but have gone on to move upward. But it's more or less most of the way up, it's uninterrupted. And the problem with this is it's smooth sailing, right? It's, I'm just going to put on a trailing stop kind of market. It's that easy, right? I'm locked in. You're locked in with a trailing stop until your trailing market stop hits into an empty book, and then you trail your stop entry. Your exit starts there, and then it ends over here, right? Because this whole book just evaporates. So this has not been tested whatsoever. Now, the test that you might get in this kind of market is one that sometimes I say you might want to just not be around for, right? Because you get something that, does something, let's say moves back up to the high, pokes the all-time high, and then it nukes some major levels and then immediately starts recovering into a prior range. So you might get that. And I say, hey, you might get that, and you might want to, you might hope that, the better thing to be at sometimes is not even at the computer, because you're going to start messing around with your positions at that point, right? And again, the idea is have a trading book, have a portfolio, right? Have an investment allocation. And the problem with a big move like that, when you haven't planned for anything and you haven't hedged or you haven't protected yourself, is, what happens is a move like that occurs, and then you're seeing it occur in progress, and you start trading your portfolio, and you're like, I'm getting out, and then you get out at 17,000, and then price is up at 18.4 again, and you're thinking, oh my God, I got to get back in. You get back in, price retests the underside of some range, comes back down. You get the idea. You're falling out of your cadence or your rhythm with the market, which is another really important reason to keep a separate trading and investment account, right? To keep those accounts separate and use sub accounts. So, or for me, I have a 90+% of my Bitcoin on hardware wallets, right? So the levels that we have right now are not that substantial. Okay, if we look at them, we have, again, a pretty smooth trend on the way up with the 4-hour chart. Another thing that I want to be careful about is, the whole narrative that, New York Open, market moves upward, right? There's this systematic bid. Once something is really known like that, players and participants are going to be acting on behalf of that assumption maintaining, rather that behavior maintaining. You have to imagine to some point it's not going to become that easy. Markets are never this easy, all right? In the long run, again, don't let what we're talking about for the next month get in the way of thinking what will occur over the next few months, okay? So make sure that you understand what I'm talking about right now is isolated to the near term. I think, without a shadow of a doubt, that Bitcoin is going to be above the all-time high within the next month, 2 months, right? What I'm talking about is what transpires within maybe the next 2 weeks, okay, or the next week. Who knows? It could be the next 24 hours, right? But make no mistake, I am bullish on the higher time frame. I think that absolutely at this point we're going to be breaking the all-time high, right? I'm just talking about the activity that's going to take place prior to that. Are we going to put in some type of base on the way up, right? Form some type of stronger structure on the way up, which we have done before within previous markets on the way up as well? Or are we just going to take it out? Okay, I would prefer that we had a cool down. I like markets that cool down, that find a base, that find a certain level of equilibrium. Futures begin to sort of unheat. And the futures market right now, it's not exactly that it's hot. So if we look at, we'll look at SKU2, we'll look at annualized basis. Funding rates not that cooked, all right? So they're actually neutral again, so that's a good sign. So that's something to consider, right? If we start moving sideways and funding goes neutral or negative, then I'll probably end up, adjusting to that new market generated information, right? Let me just sign into this. 1 sec. And analytics. But for the most part, most of this consolidation has been on a pretty overheated futures market, right, compared to what it has been prior, which makes you ask the question, does that even matter though, right? So we're looking at annualized basis, okay, which it was around 25%, right, or right now it's around 15 to 20%. You're looking at most of this activity more recently has been skewed to the upside with regard to funding. So is this that important though, or is this just an indication of how the market is going to be moving forward? Because again, everyone wants extra upside capture. That's something that I'm kind of like wrestling with back and forth. I still think that those people don't get a free ride, and I do think that anyone who's large enough to want to use that to gain increased exposure is not going to appreciate holding on to their long perpetual swaps and experiencing that sort of position decay. So as I said, if you have, let's just use a really even number. If you have a position that is experiencing 10 basis points of funding, right? So a long position, funding is 0.1, so 10 basis points. If you're using, 5 times leverage, all right? If you're using 2 times leverage, that becomes 20 basis points. That becomes 50 basis points, right? Towards your notional value, but applied toward your margin, right? So if you are trading with a lot of leverage and you're thinking like, I'm going to add a big position, but I'm only going to use a small amount of leverage and collateral to control it. If your funding is high and then you're using a multiplier of that, or you're multiplying that, then you are going to experience a lot of decay by holding that position. So much so that if the funding was, let's say the funding is, 20 basis points and you use, 100 times leverage, well then the funding is 20% every 8 hours. So your position would be, liquidated over a 40-hour period, right? I think that's how the math works out. So theoretically, your position can be liquidated. So there is an incentive for these larger traders to actually not experience that funding interval, right? Depending on what they're using to control their position. This is not obviously applied generally across the board. But if you're using a large amount of leverage, which the better traders don't use a large amount of leverage, if you're using a large amount of leverage, you're going to want to sell before that period sort of comes up or that window comes up so that you can get out of paying that, and then maybe you'll get back in a position. But if anything, this yields a certain amount of volatility pre-funding expiration, which could be, you could say that maybe that is arbed away because it's all known already. But either way, this is one of the tools that I look at if the market is consolidating. So if we have a market that is, one sec, how do I turn on the Shift W, is that? No. Where's my drawing tool? Whiteboard, and it's Control W. So whiteboard. If you have a market that is consolidating during this period of consolidation, right, where you have pretty defined highs and lows, if funding over this period is going up, and it's not necessarily the funding I'm that interested in, it's the actual basis. So the premium index is one tool that is a derivative of this. If you see that occurring and there's no progress by price, that along with something like a divergence in delta or signs of absorption, it just actually indicates that. It's indicating that for the amount of effort that's coming into the market, there's no results being yielded. I don't know if anyone caught that. I was going to say, instead of results being yielded, I was going to say results being yielded. So yeah, it's tough to say because as the market moves up, people are going to want extra exposure, so that's going to come at a cost, and it's going to be positive funding. Because who the hell wants to sell the market when it's dominantly up, right? You have to incentivize someone to do that to begin with. So as far as the short term, so let me just go to some of the short term levels, and I'll look at what you guys are saying, some charts. So as far as short term levels, okay, I have the promised land up here. That's the all-time high, right? So all-time high, I have it a tick over. So 19,697 on Coinbase. Not concerned about where it was on BitMEX, even though I'm looking at BitMEX right now. I'm keeping an eye on where it was on Coinbase. So where we are currently right now, I have a few levels mapped out. All right, that's the weekly high that we're at. So going back here, but on the lower time frames, put on my session volume as well, because I know not everyone has XO or a Sierra chart platform, but everyone has TradingView. So what we have currently right now. So the other day when we did a live stream, what did I talk about occurring? I talked about the idea that maybe this was a top would be behind me, or I would consider less if we had this volume begin to be distributed at the low and we maintain trading above it. So that actually happened to a T. So we had the volume above us. Okay, then we started building a base into the low. We had the delta divergence into the low, and then we started trading above where most of the volume came in. And it was just an indication that, yeah, the market went into a period of consolidation where you did have this value overlap. That's not good when you have the volume above you, because most of the risk is above you at that point. You could assume that sellers are in better positioning. But if you continue to move sideways and you see this point of control begin to drop, and yet price continues to maintain its level and then begins to trade higher, it's just an indication that that volume at the low is now putting buyers in a better position. Or you could say that buyers are in a better position than short-term traders that are short. So you got the move up, but now what do we have again? We have 2 days that are in relative balance. Okay, clear highs at this point. We actually did take the high, right? Even though sometimes that's just a meme. Clear highs at this point. Value overlap, right? And then we have the value area, which are those red lines. The value area point of control, the volume point of control, right, of the value area, which is always going to be in the value area. The point of control above us. So again, that's just another thing that shows me, and I could look at something like VWAP too, that we're trading underneath where most of the risk was put on, even if you just assume a 1-for-1. So I prefer that my tops, actually, if I'm assuming something is a top, I prefer that situation, right? I prefer to see that most of the volume is trapped at the high and price is trading below it. So most of the volume up here, that's where the points of control were. If you look at the TPO chart, it gives you a better idea. So volume point of control, volume point of control. Is this the CME? Same thing. So we're looking at the CME, but I'm talking about MEX also. Or just a representation of the other, in the crypto native markets, which are going to be the same on Bybit too. Most of the volume is at the high. Sierra chart I'm keeping because I have the CME data feed, and I think that is going to be one of the most important things in the next year. But I still look at Sierra for BitMEX as well. But you have most of the volume now trapped at the high, which if you're making a less scientific compelling case for absorption or a potential turn, you would actually want to see this. You'd want to see that you came up to the high, put a ton of volume up there, but now you're trading lower, right? It's just, what are you going to unwind if you don't have that, right? If you have something that moves up like this, and most of the volume is up here, and you get a move down lower, but then you're trading back above the volume, well, what's an indication of, of buyers in control? It's maintaining where most of the volume came in. And we're using a point of control for this reference because I'm trying to keep things as simple as possible, but a lot of times what I'm going to be doing is paying attention to certain VWAPs, which are your volume weighted average price. So I have the daily VWAP, I'll have a 3-day, and then right now I have the 7-day on the chart. So this is just where the market has put on most of the risk. So we've taken the high, right? So right now, if we're looking at this on the shorter term, what do we have that stands out on the TPO chart? Okay, we have a clean high. So we actually have a ledge, all right? We have a selling tail. So the market came into this level, and where is price being accepted? Where is it being rejected? It's being rejected up here. You see, have a good tail. So we have a good tail. We cleaned up this poor high. Value is still distributed within the yesterday's prior value day. Okay, we did hold the value area high of the last composite, which was where value was distributed for those 4 days prior. So we held that, but most of the volume is above us. If there are any targets that I would say set up, if you gain acceptance back into 18.8, you're probably at least looking initially back to 18.3. If you put in this type of high though, right, the closer that we are, the more that we are overextended, right? So the more this thing just vertically moves up, it's not vertical, but let me get the sessions off the chart. I'm sorry. So this is probably getting in the way. The more vertical that this structure excuse me, the more vertical that we are, right? This is kind of chugging along. It hasn't had a blow off top yet. But the more we move up in this straight line, the more that each major correction, in my opinion, could potentially lead to a much more drastic one. So the more lows that we have uninterrupted, the straighter up we go. It makes it that much more possible that the one low that gets taken out leads to multiple lows. So that's just what happens when you don't have a really substantial structure. You have a lot of conviction right now to the upside, but you don't have any kind of substantial structure underneath to catch you. There's been really no lows that have been taken. Let me look at some of the questions really quick. And what we'll do is, so I took a long yesterday. So we took a long, we were taking, during a stream, BlockRoots, I took a long, and during the stream I was talking about whether or not I was going to be stopped out. It wasn't stopped out. I closed that long. Right now you might say, hey, we're back down at that value area high, right? So why not long this? Okay, so right now I'm short this for a reason. I'm not long in this because I think that there is a potential for us to have a little bit more of a pullback, and I'll clip the high right here, right? Clipping the high right here with a short, and I have my risk clearly defined. Where is my thesis invalidated? It's invalidated next to the closest possible place it could be for the higher time frame structure that we have right now. The break above the all-time high completely negates my idea in the short term for sure. Okay, I think that if you break the all-time high, it's entirely possible that this thing can stop at 21. It could stop at 25. All right, so it's not that I'm saying that the thesis is invalidated. Like I already said, hey, maybe we break above the all-time high and then we get a big kickback. But I do know that this is a chance where I can actually put a really tight stop, and where I should put a really tight stop. So this is not a trade where I'm going to say, oh, all right, I'm going to give this trade, 2 ATR because, it's expected volatility. No, if this trade goes past the all-time high, I don't know whether or not it's going to stop there because it should, or whether or not it's going to overthrow $5,000, right? So I know that if I am presented with that situation, let me get the fuck out right away. Let me get out right away. So this is something that is really close to invalidation for me, which is an attractive way to model your trades rather than saying, I feel like this is a good short because the general direction of the market is probably going to be moving down soon. No. Are we close to a level where I can contextually define this position in an attractive way? Yes. Then, yeah, take it, right, if you're going to trade somewhat mechanically. All right, so let me look through some of the questions, guys, because I've been going on and on. All right. So it is an echo chamber. Yes, it is. TradingView ideas are bad as Twitter. Yeah, they are. Absolutely. Any snowflakes offended? Americans Thanksgiving talk. Financial concerns equal BTC shooting up. Yeah, it's a different Thanksgiving this time around from a few years ago, right? Or the last few years. Ryan, I'm very romantic about Bitcoin because I live in hard dictatorship. Listen, Daniel, I get it. There is a reason. There is a fantastic purpose or a potential for Bitcoin for many reasons. Okay, bank the unbanked, right? Allow you to have self sovereignty over your money, right? Be your own personal bank. Censorship resistance. Okay, the potential store of value against inflation. There are many things, right? The fact that you can remember a seed phrase in your head. I don't suggest you try it, and you can take your wealth with you across borders. There's a ton, sew it into your luggage. Who knows, right? There's a ton of reasons why Bitcoin is incredible. What I'm talking about is there's something called value, right? All right, and then there's, you have to look at things like a value investor would sometimes, right? I was going to talk about value and growth, but I don't think I'll go down that route. So there is long-term value to Bitcoin, but are we at that point where the speculation has made that gap a lot larger than it should be? Okay, so it has to catch back up and sort of revert to the mean. Okay, so the fair value of Bitcoin right now, it's hard to determine what it should be, right? There's some people that use different on-chain metrics, but I think that you have to be mindful of where you are within the cycle if you're a trader. So you have to remember, Daniel, that I am primarily a trader. I have a lot of Bitcoin. I own a lot of Bitcoin. It's something that I do think is an incredible investment and will be. And I said 2x. I think that I think absolutely it will 2x this year. Now, do I apply that thinking in my intraday trading? No, I want to keep those separate. So what I'm talking about is people becoming exceptionally romantic about this particular point in time. Okay, and forgetting Bitcoin. So put it this way, being romantic and not being mindful that during these periods, there are periods of the chart where it gets scary as hell, right? If you look at, and they're not, they're quick if you're looking at a higher time frame, right? If you look at the 30% corrections, you go, oh, yeah, this, in the duration of this trend, this is short-lived, right? This is short-lived, yeah. 2 weeks, 3 weeks, that's 3 weeks of wondering whether or not that you completely got it wrong. So the problem is not being mindful of that, the potential for that, and not the potential, but the guarantee that that is going to occur at some time. It's one thing to say, though, it's one thing to say where that's going to occur. So you look for the signs, right? I said, you could break the all-time high, go to 27, and then get your 30% correction. And for people that are not in Bitcoin right now, so the problem is there are people that they're looking at this and they have no background in investing. They have no background in trading. And I'm talking about some of my friends, right? So I have friends that are hitting me up. They're really bright people. Two of my friends are actually portfolio managers. For one of them, he's looking for a new job. I talk about this online. But one of my best friends is a portfolio manager, and I think he manages $3 or $4 billion, right, for a top 5 bank. He doesn't know a lot of the things that we know because he's not a trader. He's a portfolio manager. But there are people that are well outside of finance that look at something like this and they hear about, pullback, and they're like, okay, I want to buy Bitcoin, but now I'm going to only wait if we're going to come back. I heard we're going to come back to 10K, right? I heard we're going to come back to 12K. So they're saying that because they're looking at this moment in time and thinking that Bitcoin corrects 40%, right? So they do the whole math from where we are and they're like, all right, so 40%. So I'm going to buy at 11.3. The health of the trend, or historically the trend has had 30 to 40% corrections, right? 20, 30, 40. Where those come in is not you don't make a living at guessing where those come in, right? We're assuming where they come in. That 30, 40% correction can come in after we've already moved up greatly from here. And then if you're a person who's not, is completely inexperienced, and that's the basis for your entry, that you're going to get that over here, you're actually left with the choice of then at this point buying at the same point that you could have bought previously. So you're just starting off on the wrong foot, right? So I think that Bitcoin is absolutely an incredible piece of technology, and I put it that way. And that's that was one of the main reasons I was captivated by Bitcoin to begin with. I saw it as a piece of technology, right? And that is kind of an oversimplification, but I looked at gold, and you look at Bitcoin, and it's like everything goes towards digitalization, trying to use as much common sense as possible. The old stuff, it sticks around for nostalgia, right? Gold, I think, can stick around more than just for nostalgia because it's actually tangible. And, if you're in a Mad Max situation and shit hits the fan and we're all running around the scorched earth with like, hunting for our food, you get the idea. To be extreme, tangible things are going to be way more important than your USB stick. When there's no electricity, I don't want to go down the doomsday route, but you get the idea. Sir, I'm hungry. Well, if you get me electric and you plug this in, I could buy my, ration of water from you. No, give me a piece of gold. Give me a shiny object. So things like that will always have a place. So sorry, Danielle, I don't want to give you the wrong impression. Bitcoin tattoo, yeah. Bitcoin is literally the only thing. So Danielle, like I said, right. How to prevent getting stuck in social media echo chamber. I think it's dangerous, Don, because the echo chamber is actually it's not an accident. It's purposeful, right? Watch that new social media documentary. What's it called? I forgot what it's called. You guys, someone will know it. But it's built around you, right? It's built around you. The algorithms are putting this stuff. They're learning about you and putting this stuff in front of you. And the thing about that is, like, am I grateful that on Amazon, when I go onto Amazon, it knows what I like? Yeah, I actually am. Like, I'm just to broadly speak about these, certain algorithms that turn your world towards you, right? Some of them make your life more convenient. Okay. Sometimes I can't think of what I want, right? If I go on Amazon, I'm like, what was I wanted this book. I can't remember the title of the book. I buy a shit ton of books, right? And this happens to me all the time. So I'm like, shit, what is this book that I really want to read? It came up in an article recently. Shit, I'm never going to remember it. What were the chances in the past, I'd go to the bookstore and I'd have to go walk through the aisle, right? I'd have to know what aisle might fall in. And then I'm like, I got to look through every fucking book. Instead, I go on Amazon and all I do is 9 times out of 10, I go to recommended for you. And it's amazing, right? It's not, it's technology. Okay. So there's that part of it, but there is the negative aspect of it as well, where it can be very destructive. 2x this year, D. Ross. I think it's it's within reason that it can 2x, guys. So people hang their head on the number they hang their head on numbers, right? So when Wi-Fi got up to, I bought Wi-Fi at 25 or 24, and I thank my buddy Stan, who's a member of BlockRoots. He's a friend of mine. He told me to buy it. Someone that I met on Twitter. He told me to buy Wi-Fi at 24, and he said it's going to the price of Bitcoin. And the first thing I thought was, how's it going to go to the price of Bitcoin? And then, of course, what I do, I look at the market cap, I look at the supply, and I look at the potential right from that alone, right? I don't want to. You don't have to go too much beyond that. It's a speculative mania right now. This would only need to do a few multiples to be at the same level of shitcoin XYZ. And right now, since this is the flavor of the week, it wouldn't take much for it to get there. So value and price are completely different things. I think that Bitcoin can be much higher, at least 2x this year. And I don't think it would be that difficult if we have this continued institutional bid. At that point, it's only, what is Bitcoin's market cap right now? It's like 370 billion. What is it? 455 billion at this point. I can't remember. I think that's the total market cap. We'll see. We'll find out in 1 second. So Bitcoin's total market cap is 350 billion. All right. So Bitcoin right now is worth more than most of the stocks on the S&P, if not, majority of them, right? So would it be odd for this to double given the float, given that there's only 21 million of them? There's only so many, there's obviously less of them that are able to be bought now that are not currently owned or lost. So the potential is absolutely there for it to 2x. And you should understand that it wouldn't take much at all for that to occur. Bitcoin already is something that is hyper volatile, right? You introduce there's a multiplier effect that you introduce, just a substantial little bit, it's hard to say. It sounds like a fucking oxymoron. It is. I was going to say a substantial little bit more. So if you introduce more capital into the system, that is going to expand a lot more. So I think that I think two times this year I think it's conservative, honestly. Now, let's say that 1.5 is the safest answer I could give you without sounding, again, don't want to be sensational, but that's where I'm coming from. I think that Bitcoin is going to 2x at least this year. And you have to understand with Bitcoin, Bitcoin can Bitcoin can be at 30K. So when Bitcoin breaks the all-time high, so just remember what you're trading, right? And I always say, people are either correct about the direction and incorrect about the magnitude, or correct about the magnitude and incorrect about the direction. So everyone's waiting for the move to go up. We're stalling, right? And what happens? You get a $1,000 candle in the opposite direction. Or people are getting the direction of the move right, and you're thinking, how the hell is everybody on the same side of the trade right now? That we think that Bitcoin is going to move up to this next resistance at $500 up, and then instead of doing that, the magnitude of the move was something that everybody got wrong, right? So Bitcoin moves up. The breakout is a $2,000 short squeeze. Whatever. People are not going to be correct about the direction and the magnitude often. So right now, there are all these people that are coming out and saying, Bitcoin above 20. God damn, my fucking nose is itchy. So Bitcoin 20K, Bitcoin 22K. It's going to break the all-time high and go to 21. Whatever. So it should not surprise you at all if Bitcoin. I know it's my beard, so it's a pain in the ass. There's you can't see it on this resolution, but there's two little hairs they're just curled up usually, and they just poke me in the nose. But I'm not gonna, get the tweezer out of my wife's bathroom right now and pull it out. But so Bitcoin should not surprise you if it at this point, if you've been around long enough. If Bitcoin goes to 14K, are you gonna be surprised? If Bitcoin goes to 27K in a day and a half, are you gonna be surprised? I'm not gonna be surprised at all. If Bitcoin crashes here, I would say, fucking A, of course, it's Bitcoin. If I think Bitcoin is going to turn here, right? There's so many of these signals you get, right, that look like they're really substantial. Like I'm saying all these things right now that I think are good reason to be in this it's a short, but it's really a hedge because I have more exposure than that long. So I can't say that I'm net short at all because I'm not. I wouldn't do that. But if let's say, I'm in this position and Bitcoin nukes through my stop to get out of the position, and it's up at 22K and it never comes back down. You know what I'd say in a week? Well, obviously it didn't come back down. The trend has been up. Buy the fucking dip all the time until it stops working. So you should be prepared for this, right? Because it does the unexpected, and it does it to the nth degree that nothing else does besides maybe Tesla, right? But remember what happened with Tesla. People created a Tesla Q, which was dedicated to Tesla short sellers. Netflix had a documentary on people I'll call them total assholes who were betting against Tesla the entire time up, and they had camera time. Like they had people follow them around in a goddamn video, and made them popular because they're betting against Elon Musk. Because who knows? I watched an interview of Elon Musk for the first time years ago, and I was like, never betting against that guy. That guy is a brain. All right. So Bitcoin is the same thing, I think, as Tesla in the crypto space. All right, so how long can this funding rate hold? So let me just, so Kaz, what's going on, buddy? Let me see what you wrote. So yeah, you could suo. You can argue about the 3-day chart being more overextended, but what you're doing is a lot of times people will use these really obscure, and I say obscure because you're not going to often see like a 3-day chart popped out. I look at this with things like the 20-period moving average because what is it? It's just more data, right? It's like instead of using 4 data points from 24-hour period, then let's use 4 data points based on the last 3 days, right? So it carries more weight, right? But the higher the time frame you go, the I guess more substance you can make that you can add to the decision you make based on that, but the more choppy it's going to be in that period between. So yeah, this is really extended on the 3-day, but yeah, I don't know if that, again, it's extended on a lot of different time frames. You don't have to look at the 3-day. I think the 3-day sometimes just is good to confirm a bias. So whatever helps you maybe protect yourself. Getting shaken out by lower time frame action when your idea is anchored off a higher time frame. Most pain, dude, cause you know what it is, man. You've been trading for a long time. It's terrible, right? And I don't really experience this with Bitcoin. I experience this with alts because I'm primarily 99% of my trading is trading Bitcoin full time. Getting into alts is a different animal, and I'll see the alt setup, and my alt criteria is really simple. Don't talk to me about it until it retakes previous market structure. And why do I always say retakes previous market structure with an alt? Well, go figure. Most of them have been in secular downtrends for a long time. So it's a good thing for me to use, a good metric for me to really just anchor onto. So if I look at, so I got out of these positions just because I was done with them. I was fucking done with them. I got chopped up with these a few times. But something like comp, for example, I got out of this in profit this morning, and I was in uni and it was going against me. So I was like, let me just nix these and we'll reassess. But if I'm looking at something like this, my all criteria is based on if we have enough to give me a weekly chart, I'm going to the weekly, the last major swing low. Everything is built around that. So everything is built around the last major swing point within market structure that we've lost to the downside. And it's always the downside because alts have been going down forever. So it's just now that we're kind of retaking structure, which makes this a good tool to look to, or rather a good thing to look to. So yeah, we're doing things on the lower time frames within the daily that indicate that the trend is what? Put in some type of reversal, lower highs, lower lows. Oh, what do you know? Now we're trading above a previous level that we could not get above. So it's just showing you that the trend is changing. So here's my weekly level, right? Now I'm looking at a bunch of other charts right now, and I'm thinking, okay, everything is kind of has this, has the wind at its back. All of the charts that are doing this are working out. So this is the one that has not done it yet. So you can look at it this two ways, right? I could have said, well, this is the one that hasn't done it yet. That's a bad sign. Right? This might be the last move. If, Bitcoin is doing this and everything is doing that with it, and then you're at the point where Bitcoin might be cresting and then you're still with the setup, it might not be the best time to take it, right? You have to sort of weigh, use conditional probabilities at that point. Well, it's in the context of a really good environment where everything's moving up. It worked out then. Now this is in a different environment, semi-different environment, a little bit touchy, more touchy than the previous moves. So maybe this won't work out. Either way, when we got a higher time frame close above this level, I was like, I'm going to start getting in, okay? I'm going to start getting in. I'm going to start building a position. I chopped myself up because I was looking at this on the lower time frames. That's it. I was looking at this on the lower time frame. I was second guessing myself, and I was saying, and I had a big position. I lost 5 figures initially. I made that back by trading BTC, by trading Link, by trading Uni, and by trading Comp, but I lost 5 figures. I'm pretty sure I lost the 5 figures on Comp. I'm fairly certain it was on Comp, but it was either on Comp or Uni. I'll have to double check that. But I lost 5 figures trading this because I chopped myself up. And then guess what? I chopped myself up, and what of course happened? One, I could have given this more room because it's an alt and it's illiquid, so it's going to be more choppy to begin with. I could have very well put on a tail risk stop that was much further down here, and I called it a tail risk stop because worst case scenario, I have a big loss, but I don't want to get chopped up by having a too tight stop. But instead, I looked at this on the low time frames. I was getting in and out, right? And what happened? Price ended up coming back above my initial entry anyway. So I took 3-4 trades in this when I could have kept one, and I just could have looked at the chart still and said, yeah, all right, we're above the level now, right? I'm not gonna mess around with that too much. But I was looking on the lower time frames. So you definitely don't want to do that, and it's something these things are things, as long as you're a manual trader, you have to do them for the rest of your life. Like, you're not gonna suddenly not be a human being. Okay. So App Eagle, how long can this funding rate hold? Well, so put it this way. Let's just go over the funding really quick again. So funding is a mechanism to tie the spot price and the futures price. Otherwise, you have a derivative. You are a front month derivative, essentially. You have to think of the perpetual swap as essentially the spot market with leverage. So it's like a front month futures contract. It's the closest one to the spot price. But how do you tether that if there's no spot, right? You're not trading spot Bitcoin. How do you create that asset? Well, you have to create something that trades around the spot price. So you use a funding mechanism that incentivizes people to keep the price in line. So in a time like this, here's a good example. Like, everyone wants to be long. Most people want to be long. It's it's a trend of the century kind of thing. So if you have a derivatives platform and everyone wants to be long, what is to stop everyone from trying to long, right? And then you can't keep the spot price and the derivative price in line. You have like a spot price that is, 20,000, and then you have a perpetual swap that's like 22 or much higher because people are using leverage and they have more gunpowder and it's having more of an effect on the book. The price is much higher, right? There's much more aggressiveness. How do you keep those prices in line in a way that's, that's clearly not, it's price discovery, but how do you keep those prices in line? Well, you have to use a funding rate because you have to incentivize someone to say, hey, I know the trend is up, but I'm going to short this because I'm going to get paid to do it, right? So during a market trend like this, though, where prices are this high, you have to imagine that different price levels are going to imply what different norms are. So I think that moving forward, when the market is so obviously moving upward, right? The trend is dominantly long. When I say dominantly long, that's the position that is the dominant position taken by aggressive traders, right? Aggressive longs. I think that the funding rate is just going to be what you have to always consider is the payment that you have to make for being extra long, right? If you're going to use it to increase your exposure, if you're going to use the derivatives, when it's supply and demand. Think about it that way. Futures are really in demand. The price of futures is going up. Okay, futures are really in demand. The interest rate component, the rate that you have to pay to access that is going to go up because everyone wants it, right? Everyone wants the upside. So I try to simplify things in that way. Everyone wants a piece of it, so it's going to be more costly for you to get a piece of that, to hold on to it. So the funding can remain pretty high as long as that is the dominant trade. And then I think you could still use it though in bullish conditions when you have a period where price bases out. So when you have something, let's create a hypothetical situation where Bitcoin moves up. Well, let's use this for example. Bitcoin is, let's say it's going to begin to range on the higher time for a much longer period of time. So Bitcoin is going to put in something like this. Maybe put in something like that, range for a long period of time. Who knows, okay? Don't take the drawing seriously. But we know that by that, I'm trying to convey that the general direction of the market is the higher time frame trend is up, but the intermediate trend is to consolidate and move sideways. That's what markets do. They impulse, they're out of balance and imbalanced. One side is in control. They have more of a battle between both sides. It's a little bit more of a stalemate. The one side that's in control, if they maintain control, it's going to cause an imbalance. This progress and this activity and inactivity is how markets move, right? So if we have a period that the market moves sideways, right, does whatever it does, ranges, and then we see that the market is, trading more neutral, less funding, right? In this case, I think that the higher up you go, you have to start to maybe not look for the negative values as much as maybe the more baseline neutral values. So imagine if funding is really flat, if it's 0.01 or if it's 0.01 and a bunch of them are negative, that might give you an indication that people are betting against this reversing. And if it continues to move sideways while this happens, and we'll be looking at things like delta as well and signs of absorption, then that's an indication maybe the crowded trade is the trade that has yet to transpire, which is the breakdown, and people are positioning prior to that, and you could take advantage of seeing something like that, seeing the funding begin to go more neutral, more negative, and yet price not show anything for it with further downside. Let's see. Okay. This thing starts flagging here. Okay. Do you think EV stocks are in a bubble? EV like electric vehicle? No, that would be like saying, do you think like technology is a bubble? BlockRoots, can you explain to me open interest and check analyzers? So open interest is the amount of open contracts. So it's not volume, right? So to open a position, there has to be a counterparty. There's counterparties, right? There's a long and there's a short. So for every position I open that's a long on the futures market, right, or on a perpetual swap, there's a person who's betting in the opposite direction. Okay, so open interest is the amount of open contracts that are held. So can you maybe explain open interest? So generally, let me just read your question thoroughly. I check coin analyzers and many all perps go up, but open interest down. So if you see that there's like this oversimplified tool that's used, and I'll share this with you. Similar to the volume tool. All right, so share this. This is on, I don't know. You could just Google open interest. What I just shared. So prices. So you generally want to see volume moving in the direction of the trend. In a bullish trend, you want to see volume increasing. Very simply put, it's imagine that the trend is moving up. Volume increasing is indicating that buyers are still interested in doing business at higher prices, that the market is pulling in new participants. Same thing can be said with open interest, right? It's confirming the trend. There's a couple different nuances that we won't go into too specifically with volume and open interest in pullbacks, right? Just to touch on your example, if price is moving up and open interest is moving down, that could be an indication that shorts are being squeezed, right? Because the price action that is moving up is not occurring based on new business being opened, but rather old business being closed. What I would say is to go check out this chart. You could get really into the nuance and again to the detail of different movements. I use Delta and CVD with open interest. There are tools that combine this, such as on Exo. There's a long short tool that is basically a combination of open interest, and I'm pretty sure it's a combination of open interest and actual activity on the book. So, yeah. Coin Analyze I know they have like an aggregated open interest. Let's see. So if price is moving up though and open interest is going down, here you go. Here's market interpretation. Price is moving up, open interest moving down. It's weakening, right? The current trend is weakening. That's not new positions coming in. But remember, this is on the futures market, right? So that's not the spot market. Okay. Ricky Bobby, all right. Nope, VeChain, XRP, XLM. Short him to the bottom, right? He called me high noob. Or maybe he called, I don't know. You're bad at YouTube. Hey, thanks, Lex LVS Game, Lexl. You sound like an adult. I think maybe you should go to the children's area of YouTube. I mean, you don't sound like an adult. What color Lambo are you getting? Yeah, I don't know if I would ever buy a Lambo. Lambos are shit. I've driven a Lambo and Ferrari is just a better piece of work. But I just bought a new M5, so I'm all about that. RIP Maradona. Lex didn't hang around to chat. No more comments from him. Lex L verse game. You have to understand, like I said, the kind of person I am, where I'm from, I could talk shit too. And I absolutely love it. So you could bring the heat onto the YouTube and say anything you want, but I could probably come back at you with a lot more. All right, so Math Max. Self-fulfilling prophecy, good stuff, man. Thank you. Recommending trading books. Yeah, here's a bunch of trading books that I recommend. I put these in the Discord. So I will, I got it, Captain. I'll pull that up again. All right, let's get rid of this task manager because it's not going to load up yet. One sec. And then I'll pull that list up so you could screenshot it. That should be helpful. And then, guys, if you want to look at any charts, feel free to share them. One sec. All right. Where's my Discord? All right, here we go. Okay, and then books, literature. Here you go. So if you want this list of books, just message me on Twitter. Okay? So this is a bunch of books that I put together that I think are worth adding. It might look intimidating because there's a lot of books, but there's a lot more actually. But it's a good place to start. And there are certain books obviously you should read first, but I do have a list of books. All right, when taking a trade using 2 times ATR as a stop, what time frame are you looking at? That depends on what time frame you're trading, right? If you're trading a position trade, or are you trading a, the 30-minute chart? So all of the stop distances, that's a matter of your personal preference, how much risk you're willing to bear. The idea is that by using ATR, that by using a multiple of volatility, you're at least incorporating norms into what your stop is. Because the last thing you want to do is, if I am looking at this trend right here, if I'm looking at this trend right here and I'm looking at, let's say that I'm getting into position right here, right? So I'm longing right here, and I'm going to say my structural stop is, right here. It's below that low. Well, that right there is from 80 to, that's over $200. But if I'm placing a stop that is anywhere between what the current expected volatility is for that period, on a 30-minute chart, I think right now the average sub-period rotation size is probably 80s to 100s. It's actually even higher. Average sub-period rotation of a 30-minute candle, average sub-period range, has been around 100, right? Between 80 to 130, 140. So if you're not taking that into account, right, what you're doing is allowing yourself to be stopped out for moves that should be expected, right? The daily volatility is 2%, right? And your stop is 0.5% away. Like, what are you doing, right? The average volatility for, in this direction, it's even better. So the average volatility for a 30-minute candle is, let's say it's 1%, right? And I'm talking in percentage terms to simplify it. But your stop for your daily trade is 1%, right? You get what I'm saying? Like your average 30-minute volatility to be expected is 1%, but your stop for your daily position is 1%. You should take into account the time frame you're looking at, or at least higher if you're using ATR. And then the multiple is determining, you're going to determine that depending on what you're trying to protect against, right? How much risk you're willing to bear. I think obviously you have to have it outside of that ATR. Some people use 1.5, some people use 2. Ave. So yeah, I am in Ave, and it's the one position that I am that I am just sitting on, that I'm not going to touch. I have built a pretty large position in Ave, probably the largest alt position that I've had in a really long time. So this is not something I'm going to be messing with, because if I was to exit this position, I'd probably cause a significant amount of slippage. So unless I was to get out of, if I was going to get out of this, I'd be using limits, right, to not cause any market impact. But in that case, like, I think that over time, Ave is going to be performing exceptionally well with a market that's moving up. So I'm not really worried if Ave does any kind of significant pullback between here and down here. Right? I would say that I would expect that over time, Ave probably puts in some type of consolidation before putting in another leg, but I'm not messing with this position. So yeah. And I mean, if you look at it on the daily, it's very limited. It's only had 2 periods, trending down, trending up. So you could put on your 20 period EMA, you could put on your 20 period MA, whatever you want to use. EMA is going to be more responsive, obviously. So yeah, this should act like support, but it's not. There's no Ave's. Obviously, this is the Ave chart from Binance, but if you look at Ave, Ave was lend, right? The 20 period is right here, but again, could we come back down further, down to this low? Yeah. Do I want to mess with it? No, because I think that this is ultimately, whether it stops right here at the 20 period or whether it corrects a little further down, I think that this is going to continue upward, and the trend has been really healthy over time. So, and I think this is one of the better assets. I just want to know how to become a Bitcoin baller. Yeah, I don't know. I don't think you become a Bitcoin baller anymore. I think if you want to become a Bitcoin baller, and you mean by being a trader, I think you have to just start by being a trader first and perfecting that. And then, Bitcoin's a nice table to play at, but you could play at many tables at that point. If Wi-Fi not moving up, that means BTC reaching local high. I don't think so. I don't think Wi-Fi is a proxy for Bitcoin. I think Wi-Fi can be used as proxy for maybe the rest of the DeFi market, sort of like the S&P of the DeFi market, or the DAC. But Wi-Fi is not in a bad position right now. Again, this move is significant. Wi-Fi can come down to, right around 21 and still be, I think, in a healthy trend after reclaiming the prior structure over here. And you do have the 20 period right down there at 20,198. Does BTC need to pump or dump or consolidate for DeFi to move up again? David, your guess is as good as mine. I think that, when Bitcoin breaks the all-time high, that a lot of alts probably suffer because it's a liquidity vacuum and people are going to jump into Bitcoin. I think that the only alts that don't suffer when that happens are ones that don't have direct connection to Bitcoin. If you're in a DeFi pair and it's on like MetaMask, Swap, and it only can go into ETH, or it can only go into USDT, those are your options really to get out fast, and you can't go right into BTC to chase BTC, then there's just a little bit more friction in you getting out of your position when you see Bitcoin going up, right? And I think that the pairs that are directly connected to BTC, the fact that there's really no friction makes it easy for like you to be in that position and say like, oh my God, Bitcoin's breaking the all-time high. I got to get in Bitcoin right now. It's going to moon. So that sucks out a lot of liquidity from, I got to get these hairs. It sucks out a lot of liquidity from the rest of the market. I think when Bitcoin pumps, consolidates again, I think that you see the sort of back and forth behavior you've seen for a while now, which is DeFi moves up again. And I'm late as usual. Yeah, we're about to stop, man. You are late, Crypto Life. Stellar. Yeah, comp's moving, of course, after I got out of position. So I ended up being in comp from around 127 to I got out at 134.70 something or 135, and now it's only up $2 more, but for how much I had, it's significant. That would have been significant. And I had a swap open on it. Of course, it's going to move now. Of course. When is it going? When does price go up? When you sell. When does it go down? When you buy. So let's see. Stellar. So Stellar, Ripple, all these. I think that these are a lot of them are definitely. They definitely and potentially don't go together. I think they're potentially an indication of new retail coming in, right? If we look at XLM on the higher time frame chart against, where's the highest time frame chart? Bitfinex. So I mean, we've just nuked through a range that we were in for the last year and a half. So ideally, you want to see that this forms. This is against BTC, so it's just showing in the short term its performance against BTC, where it ranged the last year and a half. So if you're looking for support, you want to see, I think, the top side of this structure hold. But I would look at XLM versus USDT, honestly. I always like to keep a BTC chart to know how it's performing relative to BTC, so that I know like I'm not in the wrong thing. You know, if Bitcoin is performing and if XLM is moving up, but it's underperforming Bitcoin, like why the hell am I in XLM? But let's see, the USD chart. I need a higher time frame USD chart. I wish I told you how much. All right, maybe that's it. There we go. No, that only goes back to whatever. I know that it's at a level though that I want it. That's important. That goes back way further. Okay, here we go. So right now, if we're looking at the structure on the higher time frame, I went over this last live stream. Higher time frame support in 2018 before that big break, retest. All right, so the area that I think you have to keep in mind is, again, this 2018 resistance. Does that hold a lot of merit right now? No, clearly it's already having no issue passing through. Though ideally, I think, you know, in terms of just this local structure, I think you still want to hold. You want to hold this window, right? Anywhere from 12 to 14, you could expect a pullback. I don't want to like say, oh, that's conservative, or that is asking a lot, and that this is just going to continue up. It's XLM, like it hasn't done shit, I don't think. XRP, like I know people are excited about it, but could this be new retail? Maybe. You know, I still will not chase. I will not chase something that's been dead, not dead, but that's been kind of out of the limelight. That's not the flavor of the month, because it could be short squeezes, right? It could be new retail, sure, but I'm not going to chase these. I think that new retail is going to make itself into the flashier pairs, and that this might just be the beginning of them getting onto Coinbase, right? He said a bad word. Any thoughts on XTZ tapping 295 for a hot second? For a hot second? I don't know. Tezos is one that I thought was going to follow Link more closely. Let's get the moving averages off. But no dice for that. 275. So, I mean, you're looking at this being retested. So let's just put the weekly levels on the chart first. This little flip on the way down. So 275, I mean, you're looking at right down here, right? This consolidation. I mean, you're kind of at a higher time frame level. This is probably the point of control within this little prior range, but this right around here, you could expect that acts as resistance. It's not exactly the best level. I don't know. I thought I was attaching it to a more clear weekly level. I mean, you got a little confluence up there, honestly, just from a previous structure, but I don't think this really old structures hold a lot of merit. But still, I mean, this is XTZ. I don't know how it's been kind of weak as of the last few months. I think that this could be some stronger old pairs holding up because maybe it is new retail getting access to these right now. So we'll see. So I have the levels that, you know, 262. I think you definitely that this is your higher time frame support now. Coming back down to 235. That area is pretty fortified. But I don't know. I'm not interested in this at all. If I was looking to long, though, would I be buying up here? No, I'd probably place bids between 262 and 228. 262, excuse me, and 240. Right around there. I don't think that these go without having a decent correction, but we'll see, because like I said, the one thing that I'm thinking of is like, could this be an indication that new retail is coming in and that these pairs are moving because they're the first ones you see on Coinbase? There's a potential for that, right? You know, I hate saying that though, because it's like, all right, there's a potential for everything. But I think that's going to wrap it up, guys. If you guys don't have any other pairs, I just want to go through some of these really quick. Dot looks, decent. Good move outside of that. So that 450 level for me was everything. But now if you're looking at higher time frame support on Dot, could you say that this is your higher time frame support level that you're looking to? Yeah, you could, right? That's your weekly level. Going back to an important daily level that we've blown through and now treating that as support. And you'll see that this is probably going to catch up with your 20 period moving average. So is this a good area to buy Dot? Possibly. What else? Damn it, come on. All right, Ave, like I said already, clean break now with comp. A lot of the times with these structures, when we break above weekly structure, so this is late, so that's one thing you have to consider. It's late. Bitcoin, who knows what Bitcoin's going to be doing in the near future. So if this is late, it might be able to make it just slightly less than everything else has prior. So I'd be looking at, if I'm looking at comp as potential targets, 145 as an initial target in front of us, and then looking for some sort of structure to build between above 127, above that weekly level. But I'm just kind of like, out of this position bothered me. Uni though is one, again, I got out of this, but it's like, just give me the setup, give me a better setup. Now it is above, so it's above your 20 period, it's above your weekly level though. So I think that again, that's my most important, that's one of my most important pieces of criteria. So we don't have any real weekly swing points that are pivots that, pivots to the downside, because there hasn't been much price action on the way down other than just straight down with Uni after that major move up. But you do have your daily level. So daily level back here now, above a daily consolidation, prior consolidation. So now ideally you want to see that this daily level, right? This right here, this daily level right here, basically that weekly level and that daily level prior. And for, I think it was what, 7 days? No, not 7. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For 10 days, that was acting as resistance. So you better see that this acts as support now. For that to remain as resistance for that long, and then to make a significant move through to the upside, and you want to see that act as support. The problem is, when you have a level established like that, it's defended over time, you want to see that the break occurs on high volatility. And the break that we had, good volume, but the day is still kind of light, right? The days are kind of light in terms of volume. So something to keep in mind. But you want to see that 386 level hold. All right, guys, I think that's going to wrap it up, though. We've been in this for an hour and 37 minutes. So, yeah, as always, guys, it's been a pleasure. So if you just arrived, just give the video a watch over again. Until next time, so what's today? This is Wednesday. Everyone have a fantastic Thanksgiving. You celebrate Thanksgiving. Stay healthy, stay safe. And I will see you all on Friday. Again, we got to keep an eye on BTC. It's in a touchy spot right now. And I am still in that hedge. I will gladly just close out and buy higher if we have a significant break and put in some type of, I don't know. I mean, honestly, like, this is a weird spot, right? You're at the freaking all-time high. I close this hedge out. I'm still exposed for most of the spot. It's like, I don't know. This, so one thing, guys, it's like there's no sample size. We have what, one all-time high break prior, really, that was really significant. We're in uncharted territory now, so it's really hard to say what to expect. And anyone that says that they know what exactly to expect is just, they're full of it. You never know with this asset to begin with. When you're not even in new price discovery, you don't know. So the fact that we'll be breaking above an all-time high and someone acts like they have an idea of what's going to happen Just kind of crazy. We'll have to play it as it unfolds. But I am going to be heading out, guys. Everyone have a fantastic evening.